Welcome back to Liberty and Finance. This is a really live stream here with Andy Schectman, the CEO of Miles Franklin and Precious Metals. He is here this Wednesday, June 4th, 2025. Andy, thanks for coming back on live and breathing for this weekly market update.
Good to see you, Dunnigan. Thanks for having me. Hopefully, my brain is functioning. I spent 5 nights in Las Vegas. I spoke at the XRP convention and met with some clients and had some meetings and a little bit of cavorting along the way and got back late last night. So I still feel like I'm encased in styrofoam. I'll do the best I can if you'll just bear with me. Appreciate it.
Our crowd will be understanding. You are the time traveler, the world traveler, the globe trotter, and you bring us a lot of insights from all over, and we're grateful for that.
My
And
pleasure.
anybody, if you want to participate in this live chat, you want to get your questions in front of Andy, make sure that you are in the live chat. That means no matter where you're watching us, first of all, if you want to be in the live chat, you got to be on YouTube, youtube.com/reluctant preppers. Jump over there. Make sure you're a subscriber of Liberty and Finance. Just click the little subscribe button. You're in. Go to the live chat underneath the video, and you can ask your questions right there, and we'll get as many of them as we can in front of Andy. We did pitch off two major topics that are clear and front and center right now. One is with sharply escalated tensions in the Eurozone, geopolitical tensions, particularly between Ukraine and Russia, with some yet to be determined amount of backing by the US and or the UK and or others. It's been very concerning about multiple strikes happening within Russia shortly after a visit from high-ranking U.S. officials to Ukraine, and what gold has been doing in response or in that environment, what it's done in the past in that environment. Also, silver taking a sharp turn northward this week relative to gold for the first time in some time, and whether this signals what Rick Rule has often told us about, in that gold moves first and silver eventually moves faster and farther. We had Michael Oliver on just earlier this week saying that he thinks we are likely to see a remarkable move in silver perhaps in the next quarter or so. So let's start there with silver and how it seems to be behaving relative to gold and relative to how it has behaved in much of the past decade and a half, or when it seems to be languishing. But you tell us what you're seeing, Andy, and we will follow your lead on connecting the dots as you see them.
Yeah, well, I appreciate that, Dunnigan, and Rick is right. Typically, in markets in the past, the flow always goes to gold first and then bleeds into silver. I think we'll see that happen here. This is a very unusual time, and the little boy who cried wolf in me says the same thing over and over, but it's happening in real time, and you can see it beginning to unfold. And it's the game that's been played on the Western exchanges is being slowly exposed. Slowly, we're seeing countries make a drive to accumulate, to stand for delivery. We saw the largest delivery in the history of the COMEX and the May contract for silver. Today, the close, or yesterday, June 3rd close in Shanghai, had silver priced at 36.36 an ounce. The arbitrage continues. We've talked at length about the level of effort that's being put in place by countries like China, who is the second largest. David Morgan tells me he thinks they're the first largest. That's what they told him when he visited China. But the first or second largest importer of silver, or producer of silver in the world, rather, going all around the world and buying up concentrate and doré and sending it back and refining it themselves. We've talked about all of that. To me, what's really interesting are the level of deliveries that we're seeing on COMEX for sure. That's something that's very unusual, and it's not something that we would typically ever see. It's happening in a very substantial way, for sure. Everyone's been talking about gold, but ignoring the amount of silver that has been delivered, including the massive delivery here in May. So yeah, I mean, I think that silver is one of these deals where you can see that the chess pieces are put on the board. And when we talk about a cup and handle formation, it mimics gold's cup and handle formation almost perfectly, with the exception of gold has broken through the base or the top of the cup and has gone up to the handle. And what we see with silver, it's right at the base, right at the tip of the cup, ready to break through. If it gets through 35, in essence, it's broken through to the handle part. And this is a long 14, 15, 16 year base building. That makes the move that much, potentially that much stronger. You can feel it. And the ability of the West to, silly as it may seem, suppress the price of silver nakedly, if that's a word, or the naked suppression, is very dangerous right now when we see these deliveries and the amount of standing delivery requests, not just on COMEX, but we're seeing it the same way on the Shanghai exchange. We're seeing it on the London Metals Exchange. When we see stuff come off Shanghai, it's that they're promoting and prompting their citizens through state-sponsored gold and silver acquisition programs to accumulate metal. In fact, just as a side note, we just saw that China has lifted quotas and increased them for the banks. The banks who are traditionally the ones importing the metal into the country, they've now increased those quotas, and we're seeing large amounts of importing coming into China. I think I have the amount. Let me just see if I do. I may or I may not. I read it the other day. I thought I jotted it down. I may not have. But huge amounts of gold and silver delivered into China. Here we go. Well, for gold, they bought 30 tons of gold in March, five times more than they officially reported, according to Goldman Sachs. This follows the purchase of 50 tons of gold in February, 10 times more than they reported, according to Goldman Sachs, and 127.5 tons in April. Well, we know that they're importing gold. The rumor is, according to Eric Young, King Kong on X, that they're buying up every ounce of silver that's not nailed down. And that's one of the reasons they're going to lengths to buy doré and concentrate, which disintermediates the market, which makes it impossible for us to say just how much silver they're really buying. But ask yourself, if a $33, $34 price was real in terms of its value, why would they be going to such great lengths? Eric says they're buying up everything they can, playing the long game. Hold tight, all you silver stackers. We will have our day, is more or less what Eric is saying. And I agree with that. So silver is finally starting, I think, to get noticed, and even noticed by the central banks and the big traders, it appears. So, we've been waiting a long time for it, whether it be the technical formation, the amount of deliveries, or the central bank purchasing. All three things are at the highest level, point to silver finally starting perhaps to get that big push above 35 into the 40s. And from there, it's really, there's very little of any resistance above that, potentially off to the races. And it's crazy with gold at 33.80, the 200-year average, roughly of even 45 to 1, would put silver conservatively at $75 an ounce. And that would just be the average price of literally last 150, 200 years. It's coming out of the ground at 6 to 1, which would put it at near $400 an ounce. So I'm not saying we're going to be there tomorrow. But what I am saying is, from an asymmetrical standpoint, not only have all of us realized what a value silver is, no matter how difficult it is to hang on to that conviction in the light of counterintuitive market behavior, it appears to me that the most sophisticated and well-informed traders in the world are now onto that same thread. And so I would expect, based upon the positioning, the deliveries, right now, the 36.36 closing price yesterday in Shanghai, the arbitrage, everything is pointing towards an escalating silver price into the fall. We already know how the world feels about accumulating gold in this environment. I think silver is not too far behind it. And that's the pattern it's followed for all of time. There's a 90% correlation in their movement, but not always with perfect symmetry. And to Rick's point, silver goes first, silver catches on. And it appears that we're right at that level, right at the time when a lot of the retail investors have kind of lost faith in silver. And I understand that. And quite frankly, that's a compliment, if you will, to the manipulators who have done a very good job, not only through volatility, but through counterintuitive price action. And by holding it down in the face of gold, accentuating, there's been a lot of people who are just exasperated with silver. And that is another contrarian indicator. When they've held for this long, they see things brewing and growing and accentuating, and just through exasperation and just being exhausted by trying to stay positive and focused, they give up. So yeah, I honestly am quite bullish on silver, maybe more so than I've been in a while. Just looking at what's hiding very, very near the surface, but yet just a little bit under the surface, so it's not getting much in the way of attention.
Just following up on one of the factoids you shared about the Shanghai exchange, Jim Jones asked, silver spot today was $36.58 per ounce on the Shanghai exchange in China.
Well, it closed. I haven't seen today's number, but it closed yesterday, June 3rd at 36.36, up $2.70 or 2.75%, rather. I'm sorry. And so, yes, this is what they do to entice the sophisticated, traders who have the ability to buy in the West and deliver in China. It'll never come back. But if you're dealing in 5,000 lot increments and you're dealing in 100,000 ounces or a couple 100,000 ounces, if you're making $2, $3 an ounce premium, that's a good trade. Well, it's great for your short-term trade, but in essence, you're selling out the future of the country. And that's kind of what Eric's point was, is that the Chinese understand this game. They're playing the slow, long game and have been delivering. And that's why they're buying up all the Dory and the concentrate, because it masks their real endeavor, their real aspiration. And his feeling is that, and this guy lives in Hong Kong, he's spot on. And he says, look, they're playing the long game to secure enough silver, which is strategic in nature, in my mind, not industrial, as we're led to believe. They're securing the future in what is really highly dependent on silver in electronics, in batteries, in military, in so many, not to mention monetary. Now, I don't know that we'll ever go back to a bimetallic system where gold and silver back the monetary system. But I do think that the realization that silver is very important, that it tracks gold regardless of its monetary status, and has since the beginning of time, those things are still in place today. So it's just beginning to be, I think, realized as something very, very important. One of the things that we've seen with gold and silver going higher is that the non-commercial interests, that would be the hedge funds in particular, have really not participated too much. And it just seems as though, looking at their participation, that it's starting to move up. So you have the central banks that have been buying, and then the non-commercial players that really haven't been too deep into gold and silver. That looks to be changing on COMEX as well. Everything is pointing towards an accentuated price into the fall. So I would say that, yeah, yesterday's move was spectacular, and we'll see if it has the follow through to continue going. It was pretty much flat today, but it's holding. And one of the things that I've noticed with gold, and we'll see how it plays out with silver, is that anytime it gets near the 200-day moving average, there is a slew of buyers who come in and support it. When you look at gold from the context of the way that I used to view it, then again, if 3,500 was the benchmark that we finally touched and then it got slammed, it would be slammed and wouldn't come back for the next decade. It would just literally be obliterated. We'd be at 2,500 an ounce right now. If, as Rick says, past was prologue. Well, I think what we see right now is this divergence in the relationship between gold and other asset classes. Gold is taking on a life of its own, and silver will follow it. I think gold is being realized as being something where access to it is far more important than the yield that we receive on it. And that access to me is something that much of the world is saying, we don't need this to pay a yield. Getting possession of it in our hands when, we're not aligned really with the West's initiative is probably more important than not. That's why we're seeing so much of the world accumulate this stuff. But it seems to me someone within the Trump administration, or some people within the Trump administration, have alerted President Trump to this fact. And you can see by what's happening on COMEX and the deliveries, just how relevant people in this country, for the first time that I can remember, are viewing gold and silver. And so that's also a very bullish sign for what's coming next.
Got a couple of questions. One, Joey from Seattle says, Andy, if gold keeps rising, will local coin shops run out of cash if people sell en masse?
100%. 100%, because local coin shops don't hedge typically. A lot of them will call us and say, I got a guy in my lobby who wants to sell 300 gold eagles. Can I offload them on you right now? Sure, you're locked in. And we will hedge that. And so you're right. That's a very intuitive point in that to some degree, unless you're up on some of the larger companies, you are the liquidity of the dealer of the coin shop is more important than just about anything. If they don't have the access or the ability to write a check, a large check, to buy stuff back, and in a volatile market, if you aren't hedging it, in a very, very volatile market, you can buy stuff, have a conversation with the person, and before he or she leaves the shop, you're already down 5% and you're in big trouble. So it's a combination of lack of hedging at that level and lack of a large checkbook. But yes, I think that it unequivocally would be something that you would expect to see and see these companies kind of fall by the wayside, unfortunately.
This is a more of a comment than a question, also from Joey from Seattle, but I think it's very fruitful because you mentioned discouragement on the parts of long-term stackers recently. One of those discouragements has been those who are needing to tap into some of their metals for liquidity to pay taxes or help out some grandkids with student debt loans or something, whatever their medical expenses, whatever, are disappointed because they see the spot price high and they think, wow, when I bought this stuff, I paid a lot over spot, so I should get a lot over spot or at least something over spot when I go to sell it. But they're finding in many cases, even for some highly graded or proofs or numismatic or whatever, that they're getting below spot offered from dealers currently. And so the comment is premiums apply only when buying. Lucky to get spot price when selling.
That's not true.
Yeah, talk to us about how the tide comes in and the tide goes out in terms of spot price, excuse me, premiums when selling.
I've done this for 35 years, man, and the environment that we find ourselves in now is foreign territory. I've never seen anything like it, honestly. I mean, there have been a few times where there were premiums like this for a very short period of time, but I have never seen anything like it now at all, ever. Um, at a time when we have the largest deliveries in the history of the COMEX market, month over month over month over month, and the traders above all of us are laughing and saying, the suppression has worked. The suppression of narrative and of rhetoric has worked. The suppression of price has worked. Um, the belief that the road to retirement is paved with stock certificates, mutual funds, and cryptocurrencies has worked. And so what you have is at the highest level, central bank and whoever the hell is standing for delivery on all this gold and silver here in the United States, they're buying it and using the suppressed price, even though it's gone higher, the mitigated price to stand for delivery. The people in this country haven't. And as a result, when Rick says 0.5% allocation to precious metals in this entire financial matrix in gold and gold related equities, not just physical metal, but equities too, says a lot. And it says everything I've ever said to you about the little man rule, where the little man always is late to the party and typically loses because the big guy who's closest to the information, forget about the wealth, that's a given, but the information puts them in a place to where they are able to pickpocket the world's commodities, in this case, with no fanfare, with no competition, at pennies on the dollar and a subsidized price. It's just like the comment that the guy made who's running the BRICS grain exchange that we produce more, consume more grain than the West, but they control the price on COMEX. That will change with the development of the grain exchange. Well, they know what we're doing with the metals prices. That's why they're building the BRICS Metals Exchange. That's why Shanghai has the cumulative volume of Shanghai gold and silver exchanges has surpassed that of the COMEX. The world is wise to what we're doing. That's why they're arbitraging with the 36.36 closing price yesterday to send as much as they can because they want it at any price. The people in this country are asleep at the switch. And so you have dealers that are literally loaded with product. Here's a good example, right? So right now we're selling backdate gold eagles. Let me just look and see, because oftentimes I have a bad habit of selling things lower than we have them listed for on our price list. But let me just look at one thing right here, just to make a point, if you would be so kind. And I may be a little bit off on this, but gold eagles right now. 1 ounce gold eagles are somewhere in the neighborhood of backdates. I don't know. Do you know what the backdate gold eagles are going for right now, Dunnigan?
I thought it was 109 and then like 155 for the
Yeah,
current.
and then we can even do better than that on larger orders. But the point of it is that the 2025s cost more than that. So we are selling backdate gold eagles for less to the public for less than we can buy 2025s for. So imagine you're a primary dealer who has an obligation to buy all of this stuff, not only 2025 eagles, but maples and all different sizes and platinum coins and silver coins and Philharmonics and kangaroos and Britannias and Krugerrands and all of this stuff. You're buying brand new stuff and yet you're selling the backdates for considerably less to the end user than you're paying for the brand new stuff. So premiums are ridiculously low, and I've never seen it like this ever in my career. So to his point, look, we were paying $150 over spot for gold eagles during the pandemic. We were paying 11, 12, 13 over for silver eagles during the pandemic. Most of my career, you would have received north of 3% over spot on gold eagles when you sold it. Um, and what we see right now to me is an anomaly, and it is a function of the public really having very little awareness of what's happening and the ability through suppression of price, through volatility of price, and through all of the other markets getting so much fanfare and attention that the lack of demand in the retail space has created an environment where dealers are bidding spot or lower on many things. American Eagles really being the exception, but you shop around and you'll find that our bid prices are typically higher than everyone in America. This is an unusual time. He's right now. Yes, you buy over and you're getting basically under. It's never been that way in my career. And unless you think things are completely different and will be this way forever, I would say this is just an anomaly, if anything else, because when the public wakes up, what is an overabundance in inventoried product can just disappear in the blink of an eye. We've seen it before. We see it happen sometimes in short duration and sometimes for 2 to 3 years during the pandemic and the bank failures in 2023. So have patience. It is an anomaly. It is the case right now. But if I were to give you a timeline of the 35 years I've done this, probably 34 and three quarters years, it's not been that way. It is right now. I don't think it will stay that way. I truly don't.
You've been talking also about some geopolitical tensions around the world. We've seen also monetary strains. There was a very poorly performing bond auction last week in the US and even worse in Japan. Scoobyism3 says, does Japan's bond crisis have the potential to take the entire world's financial markets down?
Well, it's certainly, so much of the boon we've seen in equities and in crypto and treasuries and everything was a courtesy of the Japanese carry trade, where you can borrow in yen at a very, very low rate, convert it to dollars or other currencies, and buy assets, interest-bearing yielding assets. And that's unwinding. So yes, just as bullish as it was for markets in that environment where traders had really a free lunch, borrow at zero or barely above zero, convert to dollars and make the spread in treasuries, in Nvidia stock, in Apple, in all of these high flying, high performing assets. Well, when it starts to move the other direction and rates start to move higher and the Bank of Japan has to start defending its currency, yeah, it very well could. We'll see how high it goes, but what we are witnessing, in my opinion, is the unraveling of a sovereign debt crisis. We have a massive sovereign debt bubble that has to unwind, and really the question is whether you're talking Japanese yen bonds or U.S. Treasury bonds and dollars. Who wants that debt any longer? And especially when you realize that there's a large contingency, I think, that is saying, look, we would much rather have access to it than a yielding investment in an environment where you are seeing potential to have your treasuries or your assets frozen if you're not aligned with the United States, especially now. It's very dangerous. And then it's not just what's happening there. You're talking about something in this great big beautiful bill that not a lot of people are talking about, but it's Section 899. And Section 899 of this bill is a law that's proposing using taxes on foreign investments like holdings of U.S. stocks and bonds as leverage in economic disputes. And so the law allows for a 20% tax on foreign income linked to the U.S. investments and removes the long-standing exemption for central banks holding U.S. treasuries, which could make government debt less attractive and lower yields by about 1%. And I had to really think about how that 1% comes into play. But basically, it comes into play that if you have a 10-year treasury yielding 5% and put a 20% tax on that treasury, 20% of 5% is 1%. And so instead of earning 5% on on our US treasuries, these countries are now going to earn only 4% because of this tax if it goes through. These are the things that are just very silly. At the time when, you know, reducing incentive for foreign investors who demand higher yields to compensate for inflation, for the tax hit, for all this stuff, is giving them incentive to shift away altogether. And it's creating more pressure on US treasuries as well. So we are entering a period of time potentially of much higher interest rates in places like Japan and the United States. And yes, you talk about unraveling. All of this stuff is a function of suppressing interest rates, which created distortions in asset prices because you could borrow money at next to nothing, invest it in assets that continue to move higher. And that's great until it doesn't work any longer. And as it unwinds and people have to unwind those positions, yes, it could be very, very, very bearish to say the least, in a polite way of saying it. So yes, to his point, it's certainly something worth watching, especially in Japan.
You were mentioning before the strange situation of gold in China, one of the biggest producers of gold, almost nil for exports, also very unusual, encouraging all their citizens to own private accounts of gold in their own personal holdings and their banks allowing them to do that. There's a comment here, it's worthy of kicking around. Fazdal said, China state-sponsored metal accumulation for citizens. How much you want to bet that they plan to confiscate the gold later? Any thoughts about that?
Yeah, there are rumors about that. I wouldn't doubt it. I mean, Alistair McLeod told me 2 years ago that he believed the state owned 20,000 metric tons and the people 18,000, 38,000 metric tons was his guess a few years ago, which would be 5 times more than we supposedly hold. And the theory was through these state-sponsored programs that you are then literally, sucking all of the world's gold either to the state or to the people. And now, would you knock that off, Mila? Sorry. So now we have a situation where they're asking the not only the insurance companies to dip their toe into the water, the PBOC is pushing banks to buy gold with dollars right now and have increased the import quotas. They're telling them to buy it with dollars specifically for several reasons. One reason is so that they can put it in a reserve asset like gold instead of in U.S. Treasuries. And they're even going as far as saying, go out into the open market, buy dollars, and then buy gold with it, because that then pushes down the value of the yen. And then when they convert the gold into gold, pushes up the value of gold to which they've been accumulating at cheap prices. So, yeah, absolutely. They are unquestionably on not only on a state-sponsored gold buying binge. The or the People's Liberation Army is buying a ton of gold too, and their people are through these state-sponsored accumulation programs. And in the name of the state and of national security, if push came to shove, yes, that is a theory, and I wouldn't doubt it. You know, they're just trying to figure how can we get the majority of the world's precious commodities like gold, like silver, and others into the hands of the Chinese, whether it be the state or the people. And when all of this is being purchased through state-sponsored programs, it wouldn't be hard for them to figure out where it all is.
You've been talking about the what's going on just below the surface. That's something you try to do is connect the dots that aren't obvious to the ordinary bear. Bobby Bada Bing says the inertia in our financial system is insane. People are going to have the rug pulled out and will wonder what happened. Something we've been concerned about, gravely concerned about here at was Reluctant Preppers from a preparedness standpoint. Now Liberty and Finance trying to keep people their freedom. your thoughts on that tendency with the fake news giving us not what we need to know, but if people aren't listening to the right things from independent sources, they're not hearing about the risks to their retirement and their savings, et cetera. Comments from you on that?
Yeah, everything that we see is gaslighting. I mean, even positive economic data, you have to question. They say inflation's at 2%. Well, geez, I mean, it's not 2% down here in Boca Raton, Florida. I went to McDonald's not too long ago and I got a McChicken and the McChicken meal, and like I remember growing up in St. Louis Park, Minnesota, across the street, my high school was from the first McDonald's in Minnesota, and it was always like one of the cheapest things on the menu. And I'm like, $12. He's like, yeah, you live in Boca. Well, the point of it is that inflation. I would challenge a 2% inflation number all day long. The CPI is just that. It's misinformation. As Rick Rule says, they take out maybe the most expensive, or they don't put into the readings or the metrics, the most expensive or the biggest, if you will, tax on, or the biggest cost on people's lives who are working is taxes. So you have all of this stuff. Taxes seem to be going higher, even though he's talking of lowering it. They've been going higher. Inflation is not 2%. The cost is crazy. We all are being told things that just aren't really true. But if you look under the surface, you see that the personal savings rate, Dunnigan, has fallen to 4.6%. That's as low as I can remember it. And it's led to credit card debt growth rate that's going through the roof at a time when there's 1.1 trillion in credit card debt, the highest on record ever, and worsened by high credit card interest rates of 21.3%, which were substantially lower just a few years ago in that zero interest rate environment. As a result, you have some of the massive credit card defaults that are growing and growing and growing. You have delinquencies in student debt. You have delinquencies in auto payments. You have the dollar that's down 9% since the beginning of the year. And so you have all of these things that, the dollar's losing value, the metrics by which we are told the economy is running is misinformation at best. You have people with the lowest level of savings in a very long time. They've blown through all of the savings that they had during the pandemic. They're at record credit card debt. Record defaults are starting to happen. And these are things that are happening as we get nothing but cheerleading from the mainstream. So I do believe that is the case. I wish that I didn't sit here and say these things, but it's very hard for me to sit by and watch, this lie being portrayed as things are moving, steadily in the right direction. They're not. Rates are going higher. Debt is going higher. Savings are going lower. The dollar is falling. We're a mess politically. We're a mess geopolitically. There's tariffs. There's trade wars. We're in the middle of watching a sovereign debt crisis unwind right in front of us. And so, yeah, I think your people won't be caught off guard, but most people can't get out of the way of what they never see coming. And those are the people that we all care about so much, our family and our friends, who have no interest in listening to you or me or anyone else who tries to do right by them until they see it with their own eyes. And if you're only watching the mainstream and looking at the info that comes out of the Bureau of Labor Statistics, hey, we're moving in the right direction. But I would challenge all of the information we get out of the Bureau of Labor Statistics. And I would challenge the fact that we aren't probably heading into a very difficult time with higher interest rates and lower savings. How do you service the debt that everyone has? That's the problem. And as this increases, you start to see layoffs in an environment where corporations have a hard time continuing to be profitable in a rising interest rate, falling dollar environment. Things start to slow, layoffs happen, business slows, and then it gets much worse because that debt that was serviceable with your job becomes very difficult. When you lose that job, when you have only 4% of your wealth in savings in a month or two, you're in trouble. So yes, I do think that there are black swans on the horizon. I hate to be that guy, but I don't see anything that would lead me to believe otherwise.
We've got a question here about storage. It's a little bit of a change of direction, but Joshua Ellis says, can Andy clarify the difference between the Delaware Depository versus IDS Delaware? I had to make a call after his podcast with Adam today to ask Gold Star Trust and IDS. So I know I've heard some cautionary tales from different clients about certain depositories in Delaware with certain IRA custodians that force them to use pooled or commingled storage rather than segregated storage. Thoughts from you on that question?
So IDS is segregated, um, and that's huge, and it's everything in an IRA. And I've told the story, and I told it on Adam Taggart's podcast today. I know the owner or the son-in-law of the owner. I play golf here in my community with a guy who whose wife is his wife's brother is the son-in-law of the owner of Delaware Depository, and he came into town last year, and my buddy who I golf with set up a lunch between me and this guy who I really like a lot. Super good guy, straight up, honest, ethical, good dude. Andy, why don't you send me more business? And I said, because you don't segregate IRA silver, period. You're right. We don't have enough space. He says, I don't think anyone does. I said, oh, they do. IDS, Dakota Depository, several others do. And I've had bad experiences with metal that was returned to my clients that was substandard in quality from what they purchased.
Hmm.
The biggest one that sticks out was a gentleman who bought $4 million worth of 100-ounce silver bars at $4 an ounce. Do the math. It's a lot of bars. And they were all Johnson, Matthey, and Engelhard. And this was early on in my career. I was paid by Gold Star, which used to be called American Church Trust, 20 years ago to fly around and do shows like the Money Show and speak about the IRA program at Gold Star, which was kind of a new thing that back then, precious metals IRAs. And um, so, I mean, I'm very familiar with Delaware Depository because that's who they used back then. So the client who lived in Minnesota, where I lived, sold his business, very profitable candy company in Wabasha, Minnesota, and sold it. And as part of the deal, he had to cash out his company sponsored retirement account. And he said, I want my silver. I have a big ranch in Wabasha. I can bury it in the ground. And he said, would you meet me in Fargo? We'll have lunch where our vault is. I said, sure. Now, this was my first experience with this. And I had no idea. I found out the hard way. And the client was furious. So we had all the bars sent to the vault and we met up there. We opened the boxes and 95% of them were Academy stackable bars, in some of them in crap condition. The Academy bars are generic, they're not name brand. And at the time he sold, silver was 40 bucks an ounce or higher, and it cost him a tremendous amount of money, several $100s per bar on a few thousand bars. And there's nothing they would do about it. Do the math. You're talking hundreds of thousands of dollars. They would do nothing about it. Sorry, we say very clearly it's allocated, not segregated. That's the worst example. I've had a few others. I don't need to go into them, but I'll just simply say from that day forward, there was a second occasion with a very good friend of mine who with Silver Eagles, and the Silver Eagles that we got back were crap, and they were mixed dates in tubes that were open and boxes that weren't sealed in various conditions. And I said, I'll never do this again. I will never recommend Delaware Depository again because of it. Now, with that being said, that's only with silver. If it were gold, no problem. If I were opening an account with Delaware Depository outside of an IRA, no problem. They segregate it. The thing of it is that, and I'll use IDS as an example. The thing of it is that if you were to store $5 million worth of gold at IDS in a segregated account, they charge you like 275 bucks a year, period, in an IRA. That's the deal they work out with, for example, New Direction. We're going to give your clients bargain basement rate. If you tried to open that same $5 million account open with IDS outside your IRA, they're going to charge you 40 or 50 basis points. So you're talking a whole different story where 1% of 5 million is $50,000. So 40 basis points or 50, they're going to charge you $25,000 a year to store $5 million worth of metal. Now, that would be one of the lowest rates in America. The point of it is that these IRA companies work out really sweetheart deals with the depositories. Most of them don't want to store segregated. Delaware Depository is one of them. So the bottom line is simply this: they are not a bad company. They are not unethical. They are very ethical. They're a COMEX depository. The reason I won't do business with them in the IRAs is because they allocate and they do not segregate, which means you'll get back Silver Eagles if you put Silver Eagles in. You'll get back 100-ounce bars like my client did. But sure as crap ain't going to be what you put in there. At least 99% it won't be. And that can lead to a problem. Doesn't always, but it can. And the moral of the story is when you allow someone custodianship of your product, it's got to be segregated. So that's why I choose IDS of Dallas, not because they're better than Delaware Depository, but they're better with storing silver in an IRA because they segregate it. And that is the delineating factor. So I want to be clear. I don't have a problem, and I'm not disparaging Delaware Depository. They're a fine institution, but if I were advising them, I'd say you're missing the boat. Companies like mine who refuse to send IRA business there because it's not segregated, and that leads to potential problems.
We got several more questions. We're going to get to them in just a moment. I want to give you a chance to hit the specials. I'm going to share them right quick here. Let me do this. And here we go. If you
Oh,
can
no,
read these
these are
out loud for
cool.
those that are
Now,
listening on audio.
yeah, so no, these are really cool.
Can
These
you
are the
say, can you read
Engelhard
it what it is rather than
prospectors.
just say these? Because people who are on audio won't
Yep.
know what you're
No,
talking
these are the Engelhard prospectors, and these are as rare as hen's teeth. Engelhard hasn't made anything in a long time. These are the coolest rounds of all. In fact, you will find that they're priced where pretty darn well where Silver Eagles are, and they will typically be bid at that level on the backside too. They are incredibly sought after. They are incredibly hard to find, and in my opinion, as far as rounds go, these are every bit as good, almost every bit as good as an American Eagle from a standpoint of insider knowledge in this industry. If I were going to get any silver rounds, if I had my choice, it would be the Engelhard Prospector rounds at 479 over. That's high for rounds, but it's because those premiums are consistent and always have been, and they are very sought after by collectors. So I didn't even know we had these, but they're awesome.
And the next one.
1 ounce Asahi silver bars. Here's something at 279 over. I never see the 1 ounce bars. We always have 1 ounce rounds. So this is good. And a lot of people like the 1 ounce wafers, the 1 ounce bars, um, which is, as far as I'm concerned, something that is very, very rarely seen. Typically, it's rounds and coins or bigger bars than 1 ounce. So these again, Asahi is the company a Japanese company that took over for Johnson Matthey. I believe they're made out of Utah, but they're awesome bars, highest quality, and I love a 1 ounce bar. They're hard to come by.
Intriguing twist that may apply on this. I haven't researched, and I should talk to our guest from last week from the Citizens for Sound Money. But if in fact both Florida and Texas currently have verbiage that may be changed in the future, that legal tender for silver may be limited and gold based on them only having the mint name and just the logo with no other engraving and so on other than the purity and the weight. These may be
Those would be fine. It's not the design on the back. It's no likeness, no picture of a of I believe it's no image or likeness of someone. And like the gold bars that Costco sells, the Pam Swiss Lady Fortuna, that
Fortuna.
is a
Yeah.
likeness. So those would be a no-go. I believe these would be just fine. Asahi is the refiner, the fine silver 999. That is what's supposed to be that design on the back. I do not think would disqualify it. I'm fairly certain, but I'm not 1,000%, but I'm about 99% positive that these would be considered legal tender in the state of Florida.
We got also a gold special.
1/10 ounce gold maple leafs at 39.99 over melt. You know, I personally, if I were going to be able to if price didn't matter, I could see me owning all 1/10 ounce gold coins. Typically, I buy the American Eagle, but they're usually a little bit more than the maple. I think you can never have too much utility, especially, when the price of gold continues to climb higher. Um, it's just a good thing to have some exposure to fractional gold. The maple leaf to me is number 1A behind a gold eagle, 10th ounce. And the only reason I really say that is that the maple leafs are 24 karat. And so typically they're packaged in plastic slips that are mint. The mint sells them in sheets of 40, I believe, 10th ounce maple leafs, whereas the American Eagle is 22 karat because of that 1/100th of an ounce of silver alloy, a little bit of copper, which gives it hardness. So if we were to play poker with 1,000 of those coins and 1,000 10th ounce Eagles at the end of the night, the Eagles look brand new and the 10th ounce Maple Leafs don't. But from a standpoint of value, it's as good as it gets. And I love the smaller um, sized
Mhm.
gold coins. This is as good as it gets. Price wise, 39.99 over on the 10th ounce Maple. It's a good choice.
And finally, our good friend, American Junk Silver Dimes and Quarters.
Yeah. I just think it's the best value in silver. I'm shocked we still have it, but this is again going back to that question: why do we still have it? Because the public is missing the boat on what's happening. I mean, business is good. It's stronger than it was in 2019, but it's not like it was the last few years. But at the same time, the biggest money in the world is buying more than they ever have. That should open people's eyes. It hasn't yet.
Mhm.
It will. But if you're looking for, again, along the same lines of utility with the 10th ounce gold, the dimes and quarters offer you the greatest utility you can have in silver. And in an item that was only second to American Eagles in cost for 3.5 years during the pandemic, double digit premiums, um, both buy and sell at a buck 99 over and even cheaper on very large orders. Um, it's the best value there is in silver.
And with U.S. Mint lineage to boot. So,
Right.
uh, I wanted to get to another viewer question. This one takes a little bit of, it's a thought experiment. It's worth pondering.
Okay.
Harkness asks, will it be hard to sell silver during the collapse? There, that you can take that any way you want and peel back the layers, but we've certainly seen some bank failures. As recently as first quarter of 2023, we saw the second, third, and fourth largest bank failures in the history of the United States. There was extreme emergency measures taken by the FDIC in response to those failures. So we don't know exactly what the shape and the sequence of quote unquote the collapse will be, but as a large precious metals dealer, what factors do you imagine will impact the industry and the ability to sell for people to sell silver to dealers, for example, during times of financial systemic change?
Um, there would be that problem probably with the local coin shops. The large dealers who have a larger checkbook and the ability to hedge, it will be less difficult. But it depends what the definition of collapse is. What does that look like? Um, you know, it, my mind's eye can go fairly astray, and I could see things being very difficult, but I would rather have options when others have none. I would rather have a challenging time finding someone with the wherewithal to purchase or to trade with me rather than be stuck in a currency that no one wants altogether. And you look at the definition of collapse. You have people like Warren Buffett and Bezos and Zuckerberg and many of these insiders who are in cash and are sitting on the sidelines. And so while there will be some that will be wiped out, there will be others that won't be. There will be others that have shorted the market just at the right time. As crazy. I mean, it's just like shorting the airline stocks on September 10th, 2001. How'd that happen? I think there'll be a lot of people who were probably enriched by all of this because they have the information. And I want you to think about that statement in terms of the deliveries on Comex and around the world at a time when price isn't really suggesting that that would be logical unless they have the information. So I would rather take that chance and have options when others have none. And I would say there will be a large contingency of sophisticated and sophisticated is not even the right word as much as it is plugged in investors, plugged in people who might just be there to pick up the slack. And the the truth of it is it wouldn't take but a couple very well-heeled people to obliterate everything in this industry in the United States pretty easily, pretty quickly. So I wouldn't worry about that as much as I would your friends and your family being, you know, railroaded by what's coming and the fallout from that. So you do what you can to protect yourself. You hope for the best. You prepare for what could be the worst. But in a world of imperfect choices, I'll roll the dice with that because through everything the world's ever thrown at it, wars and inflation and depression and pandemics and everything else, it still has found a way, gold and silver have, to be valuable world over. I don't see that changing this time. Just might be a little bit more challenging, um, just everything around us. But liquidity, maybe the biggest challenge in that situation is delivering it, using FedEx, taking the insurance, doing all of those things. I mean, there'll be challenges depending upon how bad it gets, but I'm willing to accept that risk rather than being totally locked into dollars, which in a crisis no one's going to want. Kind of like our sovereign debt right now. No one wants it. That's why the Fed has to come in and step in and buy it, and why the Treasury has to come in and buy longer duration treasuries to expire them, if you will, and then probably has to borrow on the short end in order to finance it to buy back the long bonds from the market. There's not enough demand out there for the debt. Well, the same thing could be true with the dollar. There could be issues, but if that really is the case in the face of a reset where institutions are in trouble, where the dollar's in trouble, where banks are in trouble, well, what do you have that will allow you liquidity? I would rather take my chances with gold and silver than just about anything else.
And now, the most important question of the night in front of our 1,300 concurrent active viewers. Thomas Toops asked, Andy, what's the story behind your Everlast boxing glove?
Um, well, I'm not a boxer. I did play an awful lot of sports growing up, including college baseball, but that is I won my flight in a golf tournament, and the flight winners in our golf tournament, everyone got. If you won your flight, you got that glove, and so I'm hoping to have a matching one here next year behind it. But it's my prized possession. First time I ever won something in a golf tournament, and that happened just a few months ago. So I proudly display it.
Well, congratulations. Wanted to thank each and everyone who is here in the live chat right now. You guys have made this real and exciting for everyone because for every question that you ask, there's between 100 to more, maybe 1,000 people who are watching but not typing out the question that they're thinking the same thing you're thinking. You've helped innumerable people. I learn more than anybody, I'm sure, by doing these interviews with people like Andy who know what's going on inside the business. Andy, thank you for your time as always.
Always
Everyone,
my
share
pleasure.
this video, share it because our friends, neighbors, coworkers, relatives aren't getting the information they need to get to keep themselves safe from what's coming and what's going on right, not just coming, but it's been going on right in front of our noses and destroying, making people go back to work who thought they were retired, et cetera, et cetera. Andy and I are here every Wednesday night, 8 p.m. Eastern, 5 p.m. Pacific, just trying to help people to get their questions answered so that we can make prudent decisions to take good care of our family. Andy, any final thoughts for
Yeah,
our
I
audience?
mean, I would just simply say price is the greatest tool of misdirection in the world, and they will use price to manipulate your feelings, your beliefs, your emotions. Don't let it happen. Just remember, whoever is standing for billions with a B dollars worth of gold and silver here in the United States, they know something. The central banks who are standing for delivery and repatriating their gold from the New York Fed and the Bank of England and buying doré and concentrate and sending it across the globe to refine it when they're already the second largest producer of silver and the largest producer of gold in the world, they know something is coming. And I would just simply say that at the level of acquisition and delivery by the biggest money in the world, and it's not very easy to find unless you're digging, that should be all you really need to know. And you know, trust your gut. It can be a pain in the butt having these beliefs and feelings and constantly be disappointed by the lack of um, price action, which is so counterintuitive until it's not. And as Eric Young said to me, the Chinese are doing this with silver as well too, because they're trying to pickpocket everything that's not nailed down. And the Western system has allowed big traders to do this. They've allowed it to be suppressed, and now it's being used against us to accumulate. And like a flip of a switch, it will change because no one sees what's coming, and what is coming is that at the highest level, institutional grade, investment grade gold and silver is disappearing, which is the genesis by which coins and bars on our level are made from. And very quickly things can change, as can perception. Um, Forever, I would argue, I guess the last thing I would say, if I were going to kind of sum things up, I would say it seems to me like, for example, treasury bonds and the US dollar and gold are flip-flopping. Everyone used to buy treasuries because they were the safest thing in the world, and US dollars. And people didn't want gold because it didn't pay a yield. Well, gold still doesn't pay a yield, but it is not someone's liability simultaneously. It's an asset to you and no one else's liability. In other words, there's no counterparty risk. And a large portion of the world, I think, is done with trusting the United States, our debt, our promises, our treasuries, and instead are moving to things like gold and silver, which will be, I believe, the building blocks of what comes next. And they don't have to trust anyone in order to retrieve them. That to me is putting access above yield. And that's changing for the first time ever. And because it's so massively important to the big players, including those here in the United States, price is the tool of misdirection to keep you and everyone you care about who would otherwise think of it on the sidelines. That FOMO that everyone has with Bitcoin and Nvidia and Apple, well, that hasn't happened yet in gold and silver. And gold's just too expensive. It could never go higher. But remember, when I started in this industry, the Dow Jones was 2,100. And the first guy that said it would go to 10,000 in the first conference I went to in 1990 was laughed off the stage. Markets go higher than anyone ever thinks possible to the upside and fall further to the downside than anyone thinks possible. Trust your gut, stay true to your beliefs. And if the worst thing that happens is you pass this metal on to your family and leave a legacy, well, so be it. On the other side, it could be the most important thing you've ever done. Don't be bummed out by the counterintuitive action, the volatility. Just remember the biggest money in the world is standing for deliver. The biggest delivery in the history of the COMEX market in both gold and silver happened in the May contract. That should tell you just how important it is to the people in this country who know what's coming. So hang on, strengthen your grip, and smile. Shut your computer off over the weekend and enjoy. And things will be the same when you come back. But one of these days, we're going to wake up and prices will be massively higher because finally, the supply-demand fundamentals will have overwhelmed the ability of Western banks to suppress the price, which is becoming an existential threat to their survival. I do believe that. And before it's all said and done, we'll probably see some banks fall by the wayside because they were silly enough to naked short things like platinum, like silver, and like gold. One last thing on platinum, and I'll let you go because I know I wrote something down. I wanted to mention it because a lot of people ask about platinum. China produces 2 tons a year. They imported 14.5 tons of platinum in April. And what's interesting, remember I said gold and silver had its biggest deliveries ever in the history of the COMEX in May? On May 21st this year, platinum futures trading volume on the CME or the COMEX reached an all-time high, an all-time high. That indicates strong institutional interest as well. Things are moving in platinum as well. So the bottom line is not just gold, it's not just silver, it's commodities. It's copper, it's platinum, it's aluminum, it's zinc, it's oil, it's natural gas. It's all of the things that you need in order to build a new system. At the same time, demand for our treasuries is falling off literally every single day. More and more and more countries are no longer buying our treasuries. They're doing business elsewhere and in other asset classes. So hold tight. It's hard every day to have these discussions and try and put on a happy face because I feel the same stuff you guys all do too. And it's a drag and it's a bummer, but you have to remember the biggest money in the world, would not buy 8.5 billion worth of gold on this last contract and stand for delivery if they didn't know something was coming. Over 4.5 billion in March. I don't remember how much in April, but it's just over and over and over and over. Hang tight. You'll be glad you did. That I promise you. Don't know when, but when it happens, you'll be glad that you had the mental fortitude to trust yourself and not get distracted by the naysayers. So, anyways, thanks for letting me go off on a little tangent there. I believe it in my soul. I mean it. And I hope people are there with me to, you know, I doubt it will be something to be really excited about because with it will probably come other things that we'll be concerned about. But it's better than being destitute and destroyed by market moves when gold and silver are your life raft that have just been sitting there languishing. Oh, that's why I own the stuff. That's right. Thank goodness. So I do believe it, right, wrong, or indifferent. I will go to my grave believing it done again. And I thank you for letting me say it publicly and being a small part of your excellent show. And I'll look forward to coming back and saying the same thing next week, probably with just some different facts.
Very good. Thank you, Andy. Thank you, everyone, for being here. Everyone, have a blessed week and weekend. God bless each and every one of you and your families. Take care, all.
God bless.
All righty, sir.